I'm glad to have you here again today. And I hope you enjoy the first video that I posted on YouTube. Today, I'm going to be making some theory class according to volume 1 because we're actually going to be having these videos accordingly to how it is in our plan to learn them. I want us to actually have some knowledge about some particular theory aspect of the trading before you can actually go into the practical aspect. And please, let's make use of this video. You can watch as much as you want, learn at your home pace and don't rush. Ask me any question you don't understand and it's going to be explained to you vividly again pertaining to whatever that you need to know. Okay, so today this is what you're going to be having. Yes, the market and understanding asset classes, 5 categories of assets: stocks of equity or equities, bonds of fixed income investment, cash or cash equivalent, real estate, futures. So if you probably did commerce in your probably maybe high school, college, or anything, you're going to have more understanding about this thing because this is the commercial market that you're going to. You're going to the financial world. You're going to knowing how money works, what's going on with the finances, of each countries, and this applies to the whole world in general. And so, understanding asset classes, he said, when you trade financial assets of one kind or another. There are different classes or type of assets, such as fixed income investment, that are grouped together based on their having a similar financial structure and because they are typically traded in the same financial market and subject to the same rules. So every financial market that we have, regardless of anyone that you have here, yes, under this category, okay, let me kind of separate it. Under these categories, okay, has their own rules and their rules are kind of similar to so because once you understand one aspect of market, it is very easy for you to understand the other part of the forex market as well. You will be able to trade any form of asset which you find yourself in, but just with little difference. Even though if there's going to be any form of difference, there's going to be a very little difference. So starting from stocks and equities, let me write here. Number 1 is what? Stocks and equities. Stocks and equities, that is number 1. It says stocks and equities. Equities are shares of ownership that are issued by publicly traded companies and traded on stock exchange such as NYSE or Nasdaq. You can potentially profit from equities either through a rise in the share price or by receiving dividends. That's just like a cherry pie. We just explained this. When you talk about Nasdaq, it's one of the great example of stock equities. Yes, when we talk about Nasdaq, because Nasdaq is like is one asset, the very volatile asset actually. Nasdaq, so it's actually a very volatile market. It's actually one of the it's part of these stocks and equities where you can have them, buy them and trade them. There are actually some kind of companies whereby they still allow you to even trade what they are into. So let's go to the second one. Bonds. Number 2, bonds. Let's just put bonds or other fixed. We just put bonds for time management, or other fixed income investments such as certificate of deposit, CDS. Fixed income investment are investment in securities that pay a fixed rate of return in the form of interest. Why not all fixed income investments offer a specific guaranteed return? Such investments are generally considered to be less risk than investing in equities or other asset classes. We can see that here now they tell us that here is actually like less risk. Can we get that now? Less risk than what? Than stocks. Yes, it is less risk than stocks. So there are some assets that are actually volatile. Like I said, Nasdaq is very volatile, but you can actually go for bonds which means they are like kind of less volatile. They are not kind of going to be giving you problem, like, assuming you are just starting your trading career, and I'll just advise you to go for a PA, a currency pair, or any kind of asset that is not so volatile. Imagine yourself starting with Nasdaq or USDT. That's not going to be profitable for you, I think, because you might not be able to handle it properly. And when it comes to forex trading, this is something you have to like give it your patience. You have to learn how the game is being played, because the forex market is so wide. Number three is what? Cash or cash equivalent. They said, such as money market funds, the primary advantage of cash or cash equivalent investment is their liquidity. Money held in the form of cash or cash equivalent can be quickly and easily accessed at any time. So these are just kind of assets that you can trade that are easy, very, very easier, and good accessibility. Let me just put it here. Very easier and good accessibility. So number 4, I was saying the difference there. Real estate. Real estate or other tangible assets. They said real estate or other tangible assets are considered as an asset class that offer protection against inflation. So that's how it works. Like, you can always have these to be traded, and they are not kind of, they are not so volatile. Yes, because they move in a peaceful way. They move in a good way. And when you even are even into the forex market, there are some understanding of things that you get about investment in the real world as well, like investing in Tesla, Apple, Nasdaq, or some other kind of investment like that. So let me just put the it offers, the uniqueness of this is that it offers protection against inflation. Let me put it here like this. Number 5, future and other financial derivatives. I'll just put as futures. You might have heard about futures in Binance, in Hotbit, in KuCoin, anything called futures. I'll just explain. This category include future contract, the forex market, options, and an expanding area of financial derivatives. These ones now, they are like a fast way of getting money. Like, I will just explain it that way by like Binance now. Like, I'll just put like gambling, because it's either you predict when a market is going to go up, you predict when the market is going to go down, and then you like kind of leverage your money, and kind of, I'm not kind of interested in it, but I'm not saying it's bad. Okay, so people are making money from it, but like myself, I just like skip off from it, so it's good that way. So I hope you understand this class, and we understand this short video. So I will be making this video this way, and you really need to just take your time, watch them, so that they won't be like so long of videos, and you can just watch this as a class and then move on to the another one. The Telegram channel is there, WhatsApp group is there, so that we can communicate every time. God be with you all. Thanks.